Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd with over $2 billion in funded loans.
Happy 4th of July. Good morning, everybody. This is Real Estate Exposed, News Radio 600 KOGO, Dan Beer and Todd Pianin in studio, along with our special guest, Stephanie Barnier. She's vice president of the Wealth Consulting Group here in San Diego County. She's a fully licensed certified financial planner. We're blessed to have her, and we're going to really dive in and get an education on what our markets are doing. So welcome, Stephanie.
Thank you. Look forward to being here today.
Great. Well, we're happy to have you. We have an awesome show on the docket for you. We're going to be discussing the often overlooked first step that any of you listening need to take this first step in your wealth plan. And by the way, you all have a wealth plan, even if it includes a lack of wealth, which often is the plan if you don't have a plan. So we're going to dive in with
Or if
Stephanie.
you don't have an advisor to help you with your plan.
That's exactly right. So we're going to talk about the often overlooked first step you should be taking in that wealth plan. Now, we're also experiencing a little bit of what we're going to call a temporary, hopefully, market slowdown that seems to be taking some kind of breather. We're going to dive in and see what the market exactly is doing today, how you could take advantage of it, and what it all means for you. And we are going to take advantage of the fact that we do have Vice President of the Wealth Consulting Group here, Stephanie Barnier, in studio. So we're going to grill her with a number of questions that Todd and I want to know regarding the stock market, regarding currencies, regarding real estate.
It's what you want to know. It's what actually you want to know. She's going to help us on questions that I think the general public wants to know, and we're going to ask those questions for you, and it's going to be like a firestorm against you, Stephanie. Sorry.
I'm ready.
All right, so that's going to be fun. But coming up here first, we're going to talk about the big happenings in Greece and what they mean for us here locally.
Yeah, I mean, Stephanie, explain. From my side, on the mortgage side, Monday and Tuesday was a respite. It was fantastic, actually. A client you referred to our team, we actually locked him in at an unbelievable interest rate because the market overreacted to Greece. But they shut the banks down.
Right.
How do you shut the banks down?
Right. There's a lot of unrest over in Greece. And I think what you need to understand is the history behind what's been happening over the past 3 or 4 years in Greece. The people of Greece have voted in prime minister after prime minister, trying to find the right one that's going to stand up for the people. And the people of Greece don't want austerity.
What do you mean by austerity? You mean like they don't want to be cheap?
They don't want their retirement money to be delayed. From age 55 to 67 is now the new number for them. Nobody wants to wait for their retirement money.
So like here in the U.S., we don't take our retirement until what age?
Full retirement age here ranges anywhere from age 65 to 67. It depends on the year that you're born.
So that's when you get your Social Security, basically. And so what the people in Greece are kind of upset about is they want to sit on the beach, drink their Ouzo. Thank you, Dan. Ouzo. And they want to do that at 55, not at like we do here in the U.S., 65 or 67.
Right.
Yeah, boil it down for us, Stephanie, because as much as we do hear about this, I don't think that most of us truly understand what is going on there, and then what does it mean for us here locally or the global markets.
Well, Dan, the banks were shut down last week. The banks were completely shut down. That scares the heck out of me.
Yeah, indeed, it does. So if you simplify it into, say, for example, your own terms, say that you have a credit card that you haven't paid off and the bill comes due. And you still don't want to pay it off. You don't have the money. So you postpone it, get another credit card. And that's what Greece has done, is postponed the debt that's due. They owe money.
They owe money to a lot of the European nations, right?
That's correct.
To the EU. It's a lot of money, and they're threatening to go bankrupt, basically?
Basically, and they want to exit the European Union. And you have to be very aware that the European Union has done everything possible, including the ECB, which is European Central Bank, has done everything possible to keep the country intact with the rest of the European Union.
European Union, that we're talking like England, London, Italy, Germany.
England and London.
Excuse me, sorry.
I had to tease you.
I know you had to. Italy, Germany, we're talking about the euro, right?
Correct.
Okay.
Correct. And so if Europe cuts Greece any slack, the issue is going to be Spain's going to take that note. Okay, we want some slack too. Portugal, we want some slack, and they don't want what we call the contagion spread. They don't want it to be a contagious situation where everybody in Europe decides to default on their debt.
So Greece voluntarily went into the EU, or voluntarily changed their currency from their past currency, which I don't know what it was called before, but they went to the euro, right? They made that choice. So now they're saying, oh, we don't want to pay our credit card bill, so let's just bail on you guys and create our own currency.
But hold on, let me jump in here because, Todd, you started off here saying that you locked somebody into a great interest rate on a loan because the market's overreacted based on what happened in Greece. I still want to know, what is all this in Greece? It's great. They shut down their banks. I'm a guy in San Diego County looking to either make investments, whether they be in the financial markets or the real estate market. What does this mean for me here? What can our listener do with this information? What opportunities are going to be, what opportunities can we look for, or which ones should we look to avoid? What does it mean for us here?
Okay.
What are the trickle-down effects that this could actually give us?
So there's 3 important things to keep in mind here. The European Union is doing everything they can to make Greece pay their debt, keep their word, and not get lazy around their commitments. So that's a great thing.
That's a very polite way of saying it, Stephanie.
No,
very, very
That's my
polite.
nature. And that's a good thing. That's a good thing for the United States. It's a good thing for Europe, for China, for everybody, because it is the integrity that's so important for the country. It sends a message to the rest of Europe and to the United States. We are not going to let a prime minister, the people of Greece, dictate the direction and how we lend to them and when their money comes due. Step number 2 that's really important is it creates volatility, and it might be short-term volatility in bonds, for mortgage rates, gives opportunity for people to lock in that might be in that window, that 60-day lock period.
Well, everyone, as you know, the United States is still the safest haven for money. So when there's volatility in the marketplace, Dan, money flocks to our U.S. Treasuries, which then causes mortgage rates to go down. So with this crazy volatility with Greece and what Stephanie's talking about, what happened was there was a huge flight to quality. And the flight to quality went to our U.S. Treasuries, which then caused interest rates for, I would say, a 2-day period. We saw the 10-year dip. It dipped on Friday. It dipped on Thursday pre-holiday as well. But sorry, I didn't mean to cut you off, Stephanie.
No, not at all. I think you have a great point. So if you're in the process of thinking about buying a home, if you're in the window of maybe be having that conversation, your documents lined up, because that's how volatile this market is in the interest rates, which equals the bond market. At the end of the day, interest rates are tied to bonds. So that's step number 1. Step number 2, I should say, is be ready. If you are in that window of this year of buying a home, have your documents lined up. Be in contact with your mortgage broker. Make that Todd Pianon.
Banker. We like to use the word banker on this show, Stephanie.
Oh, you got it, banker. Excuse me. And be ready, because that volatility is here to stay. And I think that is for the overall general market when we talk about the stock market.
So here's my question. So a lot of people, and you and I have talked off air, Stephanie, about my buddy who's a trader. People were also calling this the shutting down of the banks. This was almost like a Lehman Brothers scare to a lot of people. So for everyone out there, explain how this wasn't as bad as Lehman Brothers.
It was as bad, and it still is as bad, because they want Greece to stay at the table and make a commitment to keep their integrity. They want them to really hold their feet to the fire to the situation.
Got it.
So that's, and keep in mind, technology and news, because of technology, news travels fast nowadays, and it has become a bit of a soap opera this week.
Right.
But what that translates to is volatility, which equals opportunity.
Got it.
So Stephanie, I'm hearing that there's opportunity for that person that's in the real estate market right now, looking to lock in a rate for for their mortgage. They're going to be able to get a better rate and take advantage of that volatility. Where else, though? Because we don't only advocate that everybody go and just pour all their money into real estate. We want prosperity and smart decision making across all investment vehicles, and that's why we have you in studio. So, what other investment vehicles become temporarily more attractive than they would have been without this event in Greece, and possibly which ones become more unattractive? You know, what are you looking for right now?
So this isn't the first time Greece has come to the news, to the table. Did I lose you guys?
No, we're here.
Okay. To the news, to the table. So expect volatility and use that as opportunities, not only in the bond market, but also in the investment market. There are strategies where cash is king when there are opportunities to purchase. So I am a big advocate of waiting, not timing, but waiting for those right investment opportunities, especially in the equity market. We see a lot of upside in the growth space of markets right now, growth investments, so to speak. I can dive more into those, but
we'll talk about it in the second.
Here's what we're going to do is Stephanie just does have such a wealth of knowledge for you. Like I said, she's the vice president of the Wealth Consulting Group here locally. She's a fully licensed, certified financial planner, and she has very graciously actually offered to give you 3 customized investment suggestions for you and your family that fit your exact scenario. That's an awesome, and by the way, thank you so much for offering this to our audience. That's just so, I can't tell you how lucky we are to have that, be able to offer it to you. All you have to do, text us. You know we like to give something away every week. This is the big giveaway, and it's probably the most valuable we've ever had. So text us your name and email. All you do is send that to 858-900-3368.
Our personal cell phone, again, you give out.
That's 858-900-3368. And Stephanie will literally call you and give you 3 customized solutions, investment suggestions for you and your family.
She'll call you She'll call you during the week.
This is Real Estate Exposed, News Radio 600 KOGO. Coming up next, we're going to be discussing and diving in deeper to the often first step that most of you overlook in your financial plan, why it could devastate your returns, and you won't want to miss it. Coming up next, we're going to be back with you. This is Real Estate Exposed, News Radio 600 KOGO, iHeartRadio. Welcome back. We're with you, Real Estate Exposed on News Radio 600 KOGO. Stephanie Barnier of the Wealth Consulting Group, Vice President at the Wealth Consulting Group, with us in studio, fully licensed, certified financial planner. Todd and I have been talking about how it's surprising to us that most people, and including ourselves, we've actually done that ourselves when we were when we got going and growing our financial plan, is that most of us just go and decide, hey, we should get a house.
Yeah, we should go buy a house.
Let's buy some stocks. Let's open an E-Trade account. Let's
Schwab.
Yeah, let's just do it on our own. And for whatever reason, most people overlook the first step they should be taking, which is to seek out a great financial advisor, somebody that can put a plan together for their family and make sure that whatever stocks they're buying, whatever real estate they're going into, whatever type of mortgage they're going to lock themselves into, these are huge commitments, folks, that they actually make sense. Stephanie, why do people not typically think of somebody like you as their first step in a plan? It's kind of like, a war general just saying, hey, let's go shoot some people.
Correct.
I mean, you wouldn't ever do it.
No, it's like it's the funniest thing I see is that people think they should buy a house first. That's the first thing they should do. So they pick up the phone, they call Dan, they call me, they want to get pre-approved, they want Dan to start showing or hit someone on his team to start showing him houses. But I mean, truthfully, why aren't they going to you first?
Well, they don't know. That's the answer.
Why don't they know?
They don't know that they need a course of action, a plan for life events. Hey, buying a house is a big life event and probably your biggest purchase. Second is they think, I'm just going to retire one day and live happily ever after. Well, people aren't retiring when they want to retire.
Greece, they're trying to.
Oh, they are. Well, they're already retired. This week they're retired. But they don't know. And it really is going to professionals. Other professionals need to make people aware that, hey, don't just know the decision, have clarity around it and some confidence going into your decision. And can you keep that home for the long term? Is that a good investment for you and your family? How are you going to pay for it if things get a little bit choppy?
So you would actually help with that kind of issue?
Absolutely.
Okay, so you'd actually sit down with somebody and say, all right, you're thinking about buying a house. Great. Let's look at a plan. We'll put it together, and let's have a contingency plan. Should things get choppy? Should you lose your job? How are we going to hold on to the home? Is that the kind of thing you work out with them?
And we call those what ifs. That's a simple technical term, right? What if
awesome.
Something happens? And if we have safety nets, we can't plan for everything in life. There's unexpected things, but we can plan for the loss of job, disability. We can plan for any sort of deaths. Hey, these things might happen. Let's just be ready for them if they do, and not have to go into fear.
So, I love that.
One of the things that I think is awesome about using your services first is that, I mean, most realtors and most mortgage people would say, Dan's team is going to sell him the biggest house to make the biggest commission. That's not his philosophy. Mine is what's to get him the biggest loan. So my team makes the biggest commission. We like using your services and referring people to you because that's the place to start. Because quite honestly, I would say you may be able to afford to buy that $1 million house, but you're better off buying a $700,000 house for these reasons. Would that be an accurate statement?
Absolutely. And take the stress off of yourself and your family. I talk a lot about balance. Yes, your work is important. You're young, you're ambitious. But what about your relationships with those around you? Friends, family, kids, that sort of thing. All of those are important. Why stretch yourself into that mode and make yourself miserable or always be crunching to pay the next bill that's due?
So it's really interesting that you have these safety nets that you'll call them, and I'd be curious to hear, somebody did. What typically goes wrong? I have to assume it's job loss, but I'd be curious to hear from you. And what would be an example safety net? And having said that, I'm saying example safety net because I know that everything you do is a customized solution for each person. And that's why it's also so awesome that you've offered each of our listeners. If you want 3 customized investment solutions from Stephanie, she's literally offering you that if you just text your name and email to 858-900-3368, again, 858-900-3368, Stephanie's actually going to get on the phone with you personally
next week
and speak with you and give you 3 customized investment solutions for your family. But Stephanie, we have 2 minutes before we head into break. I'd love an example of what tends to go wrong and what kind of safety nets, generic safety nets we have. Of course, you can't,
A lot of people are IRA rich. They have a lot of money in their IRA. There's tax advantages to putting money in that IRA. And they're non-IRA, they're non-retirement account, they're poor. They don't have enough savings. They don't have enough just assets if they wanted to go take a vacation somewhere. They have another child unexpectedly. And so when you draw money out of your IRA before you're 59 and a half, obviously there's a penalty. But if you're 59 and a half and still working and you're taking money out of your IRA.
Do you have to?
You don't have to, but if you're a cash poor and you need that money to pay for whatever, you're going to pay at your income tax rate. And a lot of people don't realize that.
Oh, well, you're still working.
Yeah.
You're getting your income that you're working. And then when you take the IRA money, that's also income. So then you're going to get taxed on that as well.
That's right.
Wow.
That's right. So why not have money in a non-retirement account? Maybe you sell a stock or a bond and you pay capital gains rate, which is 10% or 15 or 20%, 15 or 20%. And it's capped at those rates. You have that cash available to do what you need.
See, the thing about it is also, and this is why I rely on you, and it's because all of that environment is constantly changing, and it's not only changing based on the markets, but also on the government and politics and tax codes, and there's just so much that goes into it. That's why it's just interesting to me that people don't automatically think of going to you. I actually want to pick up the conversation a little bit on the other side of the break because I find that a lot of people actually might be they might be selling themselves short, thinking that they don't qualify to speak to somebody like you. When should somebody start believing that they're ready to reach out to a financial planner and put that plan in place? At the end of the day, you have to put one foot in front of the other. Start somewhere. This is News Radio 600 KOGO. We will pick up that discussion here on the other side of the break. Good morning, back with you here. Hope you had an awesome 4th of July. And we have Stephanie Barnier of the Wealth Consulting Group here in studio with myself, Daniel Beer of Windermere Homes and Estates, your real estate expert, and Todd Pianin, our mortgage expert, president of Samuel Scott Financial Group. We're talking with Stephanie about about how people should be reaching out and creating a real plan with somebody like herself. But let's be honest, not all of you are buying a home with 20% down and 30% down. You're probably thinking, well, to create a financial plan, don't I need money? Like, what's that first step, Stephanie? Like, you must face this, where people actually sell themselves short, not believing that they should be reaching out to somebody like you. When's the right time? Who do you suggest actually get involved? And if not with you, with somebody, there must be a starting place for everybody, isn't there?
Yeah, absolutely. There's a starting place for everybody. And I say there are 3 areas where you getting a wealth advisor on your side, even if it's on an hourly basis, a consultation, some sort of advocate for you. You need a money advocate, somebody that's behind your back, that's there by your side, you and your family's side. So if you work for a mid-size or a large-size company and you get stock units, for example, and they're coming in, when do you exercise those? How do you exercise those? That's income, taxable income in those years. How to plan for that, when to expect it. Another reason people want to get focused on a plan is more family, other people to take care of it, whether they're elderly people, your parents, aunts, uncles, or children, kids. How are we going to take care of them, providing them the best life possible?
So I hear you saying, like, there's, people are probably making false assumptions of what it's going to cost or what it takes to speak with somebody and get a wealth plan in place. If you're not ready for somebody to handle your portfolio full time, you're just starting to build a portfolio, so you don't have one yet. There's also a consulting relationship, an hourly relationship. Simply, you can't afford to sit down with somebody. And let me rephrase that. You can't afford not to. At least get some degree of professional advice and put that first step forward. Stephanie, let's talk. Let's shift gears a little bit and tap into that big brain of yours.
Okay. Love that.
So here's what we're feeling in the real estate world. And this is what, just talking to a lot of good brokers across San Diego County, this is the consensus is that we're feeling some kind of a thawing right now, a little bit of a slowdown. Granted, things are still moving, but they were just at such a rapid, unbelievable pace. Multiple offers on everything. Everything was just gangbusters. It seems, and Todd can confirm on the mortgage side, it seems to just be taking a little bit of a breather right now. And talking to people, truth is I don't know exactly what's behind it. The theory is it could be graduation season. People are on vacations. We're waiting to get on the other side of the 4th. To me, some of it sounds like hogwash, but I'm also not claiming to have a specific answer. And so what I don't know a lot about are the greater markets, the financial markets. What's going on there, and could there be some explanation of what we're experiencing on the real estate
where's
side?
the slowdown coming from? Is there things happening in the financial space that we're not, as attuned to?
Yeah, aside from Greece, what do we have to know about what's going on?
Well, let's talk about what's in our own neighborhood. Good old USA, we're the best house on the block when it comes to financial markets. When it comes to the world, people rely on the U.S. for information, how our economy is going. The first quarter of 2015 was a little bit tough for us. Our GDP, our gross domestic product, was negative for the quarter, a little shy of 1%, which we weren't expecting. These numbers come out typically about a month after the quarter ends, so you can expect second quarter just ended June 30th. You can expect the end of July for us to get those numbers for the second quarter. So
that's surprising. That's very surprising.
Because our first quarter in the real estate market was gangbusters, right?
It was fantastic. In networking with some of the best agents around the country that I routinely speak with, there are very good reports out of most real estate markets across our country right now. So that's interesting that GDP wasn't quite on par.
Yeah, and keep in mind that markets are a bit of a predictor. So when markets rise, when they increase in value, it's the market's anticipating that economies are stronger, that the U.S. market is getting stronger, international market. So we use the stock market as a forecaster, as an indicator to looking forward. So what you could have possibly seen right now,
Sure, what is it?
Is a contraction from first quarter of this year.
So
Interesting. So
what's
we're
the,
lagging.
So what's the market? So that's a crystal ball for you. So what is it? So what is the crystal ball telling you is going to happen for the next quarter?
We might have a little bit of a stalemate here, right in here. We might just be a little bit flat. And you know what? That's okay from equity markets. That's okay for us to have a breather. We can't go straight up. You need some time just to rest and recover. Do you see that in the real estate market?
Well, that's exactly what we're seeing, except for, honestly, I always hesitate to call it a breather, even though I do. I literally use that same terminology. It sounds so unscientific to me that I don't like using it, but I don't know what else to call it. And I have been I've been in the industry long enough. This is 10 years now, going in my 11th year of being in the real estate market, to know that I've seen breathers. They truly are. In fact, Todd, we go back to last year.
Right.
Everybody, we all have this preconception that summer's the best time, and we've talked
a
lot about how that's
about
sometimes necessarily true, sometimes not.
Right.
If we look at what happened last year, we had a great 2013 rolled into a great 2014.
Right.
And what happened is we slowed down right at about June, and I could tell you that it stayed, that breather happened, and it lasted till about October, and then we were gangbusters through October until literally this past June.
I would agree with you.
I'm hoping the same thing's happening.
And
it's an interesting perspective that
you want us to have a breather all the way until October?
Well, it's not that I want you to have a breather for an extended period of time or not, but in the grand scheme of things, if that is what happens, then yes, I'd be thrilled with it, because I'd rather that than this be, a crest before a downslope. So I'd prefer that it be a breather. I'd prefer that we are, I prefer that we are headed into a similar cycle as what we experienced last year, and that then we get our bearings and we just go ahead and take off again. So that's an interesting perspective that you bring to the table, Stephanie. We had this market lag in the financial markets, or the equity markets, I should say, in the first quarter, and we might be now starting to just kind of feel that a little bit. Really quick, 30 seconds. What do you think we're going to see going forward through the rest of the year?
Well, for those of you that are visual people out there, you want to see 2 steps forward, 1 step back. You don't want a hockey stick sort of jump in prices, whether it's the stock market or the real estate market. You don't want to see your home just jump in price. It's unsustainable. It's not healthy for markets. 2 steps forward, 1 step back, pause, and then keep progressing like a staircase going upward.
It's a good analogy.
Hockey sticks are dangerous. Staircases are okay.
And we're going to head it, and coming up next year, we're going to just keep grilling Stephanie Barnier, Vice President of the Wealth Consulting Group, about what she would do. We're going to rapid fire question her, whether it be equity markets, real estate market, bond market, mortgage, anything goes. That's coming up next. This is Real Estate Exposed, News Radio 600, KOGO. Welcome back. This is Real Estate Exposed, News Radio 600 KOGO. Stephanie Barnier, Vice President of the Wealth Consulting Group, in studio with Todd Pianin and myself, your mortgage and real estate experts. But we're going to take advantage of the fact that we have Stephanie here. Rapid fire questions. Stephanie, I'm going to start off. We want to tap into that big brain of yours, like we've said. Educate our audience. Stock market correction, coming or not coming?
Correction. Could be coming. I always like to say that disclosure, but a small correction would be healthy. It would create opportunity for money that's on the sidelines, cash on the sidelines. And there are quite a few of you out there with it, cash on the sidelines. People have been nervous. When stock markets come in, you do have that correction, tiptoe in a little bit, 1%, 2%, 3% of the cash into the market and take advantage of those opportunities.
So my question to you is, most people talk about setting cash aside. You talked about it the last break. Mm-hmm. So, Dad's always taught me 10% of my paycheck should go into a cash account or, like a hidden account. What would you say? What's your recommendation?
Always pay yourself first.
So, so pay ourselves first. What does that look like to you? 10%, 15%, 5%, or does it depend upon the person and their situation?
Okay, I look at it from all of the name brands that you have out there: Mercedes, Starbucks, Nordstrom's. Why pay them first with purchasing their product out there? So looking at that first, hey, why don't I put that money that I want to spend in those areas in my pocket? They don't tell you this stuff. Of course, they want you to spend and buy their product.
Well, yeah, Dan always talks about Nordstrom selling jeans, right? Why do jeans go as expensive as they do? Because they're, so many people in the store. But is there a rule of thumb of what you should save?
10% is a great number. It's a big round number. I like to shoot for 16%, sweet 16. It's a sweet number.
And you are listening to Real Estate Exposed, News Radio 600 KOGO. Stephanie Barnier answering our rapid fire questions. She's an expert. Okay, she's an expert financial planner, wealth advisor, and she's graciously offered to actually get on the phone. She'll literally get on the phone with you if you text your name and email to this number, 858-900-3368. Stephanie's going to give you a phone call and give you 3 customized solutions just for you. Meaning, if you call and your buddy calls, you're going to get 3 different solutions. Okay, they're going to be exactly what your family needs. You're going to love speaking with her. We love her. So, jumping back in here, Stephanie. And by the way, you can find us on Facebook if you want to connect also. This is Real Estate Exposed. Find us on Facebook. Stephanie, back to you. Where would you, what sector, industry, vehicle would you say is the most oversold in this market?
Oversold. That's a great question.
Oversold, you mean like people are selling it too much, Dan, or like oversold as it's already peaked?
It's just oversold. People are dumping money out of what sector, and you think that it's creating opportunity?
Well, I can tell you that people are selling in the bond space right now. Is it the opportunity? It could be when interest rates are closer to 3% on the 10-year Treasury, currently trading about 2.4%. So there could be opportunity there in the bond space to begin investing in that space. And also areas that have been strong and continue to be strong are growth areas in the market, in the equities market. And when we have time next time, I'll go into more detail and describe what growth areas look like in the equity markets.
Question from my perspective. So if I'm sitting, you and I, let's say I'm a client of yours, and should I be taking, and my company offers a 401k, and they offer somewhat of a match. Let's just, whatever it is, we get a match. Should I be fully funding as much money as I possibly can into my 401k?
It really depends on what your goals are. So maybe. But if your goal is to buy a house and you want to buy a house with 10% or 20% down without going down the FHA route,
right?
Fund your 401k, your retirement account right up into the match. And maybe that's 6%, dollar for dollar. Absolutely get that free money.
So
with the rest of it, put in a non-retirement account for some of the other expenses that come your way. And really, the only way to understand what expenses come down the pipeline is to plan for it.
But before Dan jumps into the question, what's the max a person can put in right now to a 401k?
401k for 2015 is $18,000 is the maximum contribution limit for a 401k.
Does that go up every year? Or?
As an employee? Right. It does. It usually increases by $500.
Got it.
Every year.
Question.
Yes.
What role should real estate play in somebody's portfolio today? Possibly a little bit of a difficult question because that's going to be part of that customized solution. You're going to need to dive in deeply. So let me rephrase that. Real estate today, yes or no?
We are real estate exposed, though.
Oh, we are.
Yeah.
But you know what? If we should, I'd like to expose the truth. From your perspective, how do you feel about real estate today?
Real estate still has opportunity to the upside. I'm a believer of that right now. And I'm not just saying that because you guys are my friends and that I work with you. But real estate still has some upside to it. If it's a tax advantage, and the only real reason to look at that aspect is based on your income levels, there might be some advantages to buying real estate in here at these prices for the long term. I'm a long-term believer in real estate, buying for 15, 20 years, 30 years. I'm really confident with those numbers. That's where I really like real estate for portfolios 15, 20, 30 years or more.
What about the tax advantages, though, too? I mean, that's got to free up some cash. I mean, do you like real estate for the tax advantages at all?
Somewhat, but again, it depends. It's custom to each person. Some don't have tax advantages if their incomes are so high, so they get phased out. They deal with AMT tax, so it can be a double-edged sword.
Got it.
Mm-hmm.
Got it. Interesting. Yeah, when it comes to those tax advantages, and by the way, you really need to speak to a CPA.
Yeah.
Stephanie will be the first to tell you that. So will Todd and I. But
We should have a CPA on.
we should, and because we make assumptions of what we should do for those tax advantages and not, but that's another area where you want to be speaking to an expert. So, Stephanie, first phone call with somebody.
Mm-hmm.
How do you know what to do with them?
It's all about what their vision is. It comes down to, hey, what's your vision for the next 5, 10, 15 years for you, your family? And from there, the conversation leads itself because money's a number. Real estate's a number. All those things are tangible. It's about the intangible. It's the human element that makes a wealth plan what it is.
What makes working with you different?
That exact point is combining the human element and the analytical element into one, and getting a clear picture of how to work with the both, not just the emotions or just the numbers. It's a combination of both, because at the end of the day, we're human. Hopefully technology doesn't take over our brains too much, but we are human, and we make decisions on emotions 99% of the time.
And a follow-up question to that, what does your team look like? I mean, are you doing all the research, all the investments, placing the money, making the phone? What does the team look like?
No, I got a big team, a great big team behind me. I love them. My investment partner at 30 years, my senior, great guy. And my client relationship manager keeps everything on track, as well as our office manager. And really rounding out the team with CPAs and attorneys. Those are the biggest value adds to my clients. When I can call my CPA reference or my attorney reference and say, what do you think about this situation? I'm building this plan for this client. I can get advice and really start to make that a clear picture for the client without having to go down a long road.
You'd be crazy not to take advantage of the fact that Stephanie's going to get on the phone with you at absolutely no cost whatsoever. She's offering for you, our listeners, to call the number 858-900-3368, and she's going to actually get on the phone with you, have a full conversation, understand what you need, understand what you want, what your family situation looks like, and then give you 3 customized investment suggestions. Thanks so much for being with us here in studio. Todd, love you, buddy.
Love you.
This is News Radio 600 KOGO, Real Estate Exposed.